Good morning. I'm Lucy Beadnell with the Arc of Northern Virginia, and I'm really excited to be here with so many of you this morning to talk about some new SSI rules. That's a Social Security benefit program that I know is just phenomenally important to our disability community, something that we talk about every day. And in the best of times, it's a complicated program. Now we're in even less best of times, trickier times, where some rules to this program are changing. And we're so grateful to Claire for being here with us today to talk through those. So for folks who haven't had the pleasure yet, Claire Kelly is the mom to 3 super duper kiddos, including one with a disability. And she founded Trusts and Wealth PLLC, which is a boutique estate and planning law firm that's based right here in Northern Virginia in Great Falls, that has a focus on special needs families and delivers concierge estate planning services by designing custom plans tailored to each family's unique needs, including the needs for the loved one with a disability who may have to maintain eligibility for benefits. And thanks to the magic of Zoom and all those cool things, Claire is able to work with families all over the state of Virginia. So without further ado, Claire, we would love to turn things over to you. Teach us all the things about these new rules.
Well, thank you so much, Lucy. Thank you for that warm welcome. And hi, everybody. Thank you for attending. I know you're all very busy, and I appreciate you taking the time to be here. I promise to make it worth your while. You are going to learn a ton. I imagine most of you are here because you're already very familiar with SSI, but I just want to make sure we're all on the same page. So let's start with the definition. As we read this definition, I'm curious how many of you already are on or have a child on SSI. If you can just pop in the chat a yes or no answer, that would help me get a sense of kind of what proportion the audience is today.
Or if you don't want to type it in the chat, you can also choose where it says react. There's a heart. You can put any reaction right now.
No, that's a great idea. Yes. Feel free to do the react of a thumbs up or thumb. Okay, I've got lots of thumbs up. Lots of thumbs up. Okay, so what I'm seeing is a bunch of awesome parents who have already navigated the system, which is super impressive. You guys rock. Okay, I've seen all thumbs up and one face, so we're gonna get to that. Okay, so SSI, Supplemental Security Income, it's for those with limited income and resources who are either 65 or older, blind, or disabled. Okay, we're going to go Schoolhouse Rock for a minute, and I promise this is going to have a purpose. So in 1972, Congress passed the Social Security Act amendments, and this is what created SSI. Then the Social Security Administration is responsible for creating regulations that actually implement SSI. And so the changes that we're talking about today are changes that were made in the regulations. Then Social Security puts out this policy operation manual that they call POMS. And this is where they take those regulations and they boil it down to step-by-step instructions for people who work for SSA. So today we're going to talk about 3 new SSI rules that SSA implemented September 30th of last year. The good news is that each of these rules helps SSI recipients and makes it more difficult for SSA to reduce SSI benefits. We're going to talk about best practices to ensure your child is receiving the maximum amount of SSI now, and also how to ensure that they keep receiving it in the future through proper estate planning. Finally, I'm hoping we'll have some time for Q&A. Yeah. So as we dive in, I want to give you a little preview of the awesomeness that is coming your way. Forgive the slide problems. So first of all, food no longer decreases payments. The rent, the rules that we had before, changed drastically, and most individuals will not have to pay more than $342.33. And they also expanded the definition of public assistance household, excuse me. So before we get into this one. I want to just touch on ISM. Most of you already know what ISM. It's in-kind maintenance and support, or in-kind support and maintenance. And it's basically a form of unearned income. So if somebody hands you the keys to the apartment and says, here, you can live here for free, that's ISM. They're providing you shelter, and you're not paying for it, and it's ISM. And so when someone on SSI is receiving ISM, generally their benefit is reduced by a third. So here's the great news. It used to be that food was considered ISM, and a recipient's benefits could be reduced by a third based on her reception of food from others within or outside of the household. But under the new rules, food is no longer ISM. Therefore, providing food to an SSI recipient will no longer cause a decrease in their SSI benefits. What this means for you, you no longer need to keep track of how much your disabled child is paying in groceries, or split grocery bills or anything like that, because food just does not count anymore, which is great. Some of you who have been at this a long time might remember that back until 2005, clothing also counted as ISM. And so just as we no longer keep track of clothing that somebody receives, we no longer need to keep track of food, which is great. The second one is, I think, the biggest change, and it is one of the more complicated ones as well. So before, in Virginia, to avoid having an SSI recipient's rates reduced, the SSI recipient had to pay either current rental market value or their pro rata or fair share. And what that meant is you added up all the household expenses, utilities, etc., divided it by the number of people who lived in the house. So those were the two ways that you could avoid having your benefits reduced before. But now it's the lesser of either of those or the presumed maximum value, which, as I said, is $342.33. What this means for you, we all know that rents are high here in Northern Virginia. This is new rule can allow your child to pay only $342.33 per month in shelter, regardless of how high the CRMV or pro rata cost would be, without having their benefits reduced. There are limited situations in which an SSI recipient may not benefit from this rule, and we'll touch on that shortly. So first, how do we find out what the PMV is? Unfortunately, it's going to change yearly. The PMV is basically the total maximum SSI benefit, which right now is $967, divided by 3, and then you add the general income exclusion of $20. So the result is the current PMV is $342.33, but it is very important to remember this number will change every year. Okay, now that we understand how great this new PMV rule is, let's talk about when it does and does not apply. I have cited excerpts from the regulation here, and while it clearly shows that an individual may pay at the PMV rate even when living in the household of another, it's important to note that POMS has not been updated accordingly. So we talked before about how there's regulations and then how there's the policy manual. And most Social Security employees that you're going to work with live out of the POMS. And the POMS has not been updated even though the regulations have. So that's just something to keep in mind. The POMS still suggests that a recipient needs to be a member of their own household. So what I did is I made an appointment with an SSI adjudicator at my local Social Security office. I have a disabled son, and I talked about it in that context just to get clarity. And the good news is that the adjudicator I spoke with was very clear that as long as you have a rental agreement, you're fine. And remember, living in your own household is a term of art with SSI. So someone could be considered as living in their own household, even when living at home with their family, provided certain criteria are met. Now, we just said that food doesn't count. But you'll notice here that if you're living in another person's household, you can only benefit from PMV if others within the household do not pay for or provide with all of your meals. And this is less about food and more about showing some independence from that household. So what this means for you is your child can benefit from PMV if you have a rental agreement and they eat out once a week using their own money and save receipts. If you have a situation where a child can't physically do that, they can't go to McDonald's once a week, then you can use their debit card and put 1 meal's worth of groceries on it per week to show that the household is not providing all food. The third major change, which is also very exciting, has to do with the definition of a public assistance household. So a public assistance household previously meant a household in which every single person was receiving some sort of needs-based federal benefit. There was a specific list. And the idea was that if everyone in the household has these needs, then SSA is not going to bother trying to figure out, well, how much shelter did they provide to this person and food to this person? They're just not counting it. So if an SSI recipient is a member of a public assistance household, you don't need to count any sort of ISM from within inside the household. Okay, so this has a bunch of information on it, but I just want to show you how big of a change this was. So before, to be a public assistance household, every single member of the household had to receive public assistance payments under one of the following programs. Every single one. And you can see here, there's several programs listed. What changed is very significant. Number one, they added SNAP or food stamps as one of the qualifying programs, which is fantastic. And number two, instead of everyone having to be receiving payments, if only one other person in the house, other than the SSI recipient, is receiving public assistance payments, then the household is considered a public assistance household, and no support from within that household will cause an SSI recipient's benefits to be reduced. So to recap, this is showing that the new updated rule with SNAP listed. If an SSI recipient lives in a public assistance household, her benefits will not be reduced even if the household provides all food and shelter. The only little caveat here is that if the recipient lives in a public assistance household and is receiving in-kind support from someone outside of the household, then the PMV rule would apply. So for example, if the rent for this household were being paid by someone outside of the household, that's when that can still kick in, but that's a relatively rare situation. Okay, so we are going to do a case study so we can show just what a big difference this makes. I'd like to introduce you to the Miller family. Susie Miller lives in an apartment in Reston with her 12-year-old daughter, Rosie, and her 19-year-old disabled son, Carlos. Carlos receives full Supplemental Security Income benefits of $967 a month. Susie is ineligible for TAMP, which is temporary assistance for needy families, but Rosie receives a monthly TAMP payment. So let's see what difference this makes. Under the old rules, Susie knew that if she provided Carlos with food or shelter, SSA would reduce Carlos's SSI benefits by 1/3. So to avoid this, for food, every week when they went grocery shopping, they would go together. They spent about $300. They put 2/3 on Susie's credit card for her and Rosie, and the other $100 on Carlos's debit card. So Carlos was paying about $400 a month towards food to avoid having his benefits reduced based on receiving food as ISM. Same thing with shelter. Susie knew that to avoid Carlos's benefits being reduced based on shelter as ISM, Susie had to charge Carlos for shelter based on either the pro rata or fair share, which would have been $600, or the CMRV, which would be $700. As you know, rents in Northern Virginia are very expensive. But there's a problem. Carlos receives only $967 a month. He's already spending $400 a month on food. That leaves only $567 a month, which is not enough to meet either standard. Susie decided to charge him only $400 a month in rent, but recognizing that his benefits would be reduced when SSI came to realize that. So this leaves Carlos with $167 a month but in fear of his benefits being reduced. So now let's see what happens under these new rules. So number one, food does not count as ISM. That's $400 a month back in Carlos's pocket. Very exciting. Shelter. Carlos only needs to pay the PMV, $342.33, as long as he eats one meal out per week. He goes to McDonald's every Friday and spends $10, adding up to approximately $40 a month. Carlos is now spending $382.33 a month. And this leaves him with $584.67 a month, a much bigger amount in his wallet, and he's not at risk of his benefits being reduced. But wait, there's more. Because Rosie receives TANF, the Miller household is now considered a public assistance household. That means that no shelter provided by the household is considered to be ISM. And so Susie chooses not to require Carlos to pay rent. This results in Carlos being able to keep the entire $967 a month, which is a very big difference from where we started. Okay, so we're going to have a quiz here, and I don't know that we can do this one via hand gesture, so hopefully either people can put answers in Q&As or in the webinar chat. I don't think we can do webinar chat because of the recording, but maybe, Lucy, if it's okay for people to put their answer in the Q&A, A, B, C, or D, and you can kind of tell me what the majority is saying. So the question is, where should Carlos's SSI payments be deposited? Should they go into Carlos's checking account, Susie's checking account, Carlos's ABLE account, or Carlos's special needs account? I'll give you a minute to think.
We've got lots of answers coming in. All right, we've got 4, 5, 6, 7. Okay, so mostly C's, some A's and C's, and 1 D.
Okay, but C is the winner here for in terms
C is the overall winner, followed by A.
Okay. Well, I've got great news. C is the answer. So Carlos's checking account is a bad idea because, especially if he's keeping $967 a month, the funds could easily accumulate to more than $2,000, which would affect his SSI and Medicaid benefits. Susie's checking account is inappropriate as the payments are made out to Carlos. Skipping ahead to the special needs trust, the Social Security Administration will not deposit into a trust. And this also could be a bad idea, as if these are Carlos's funds, and if it's a family funded trust, it could mess up some of the benefits. An ABLE account, however, is able to receive direct deposit from Social Security Administration, and the funds within it, up to a certain amount, are sheltered from Medicaid and SSI. So that's where we would want Carlos to be making those deposits. Okay,
I
so
will just make a note there, Claire.
Yes.
And something that we talk about a lot is, so ABLE accounts have an annual deposit maximum. This year, I think it's $18,500
Yes.
or something very close to that. So if we think about that, almost $1,000 a month going in there over the course of the year, that means you're only going to have about $6,000 or $7,000 left that anyone else can put into that ABLE account.
Sure.
So that's something to really think about if that's where grandparents have been giving gifts, or you're planning on other policies or other funds going in there. That may change the calculation, but I would say overall, absolutely, if we don't have other money coming in that we have to compete with, that makes sense.
Absolutely. And if you are in a situation where there's others who are contributing, there's alternative options that we can talk about that will still provide the same goal of providing for that child, perhaps through a special needs trust, but leaving that ABLE account available for these sort of benefits. So I want to talk about some practical tips to retain benefits short term. So when charging rent to a recipient under the PMV rule, you absolutely must have a rental agreement. You should have a rental agreement even if you're using one of the other standards, unless this is a public assistance household. You must, you must make sure that the landlord is listing that rental income on their taxes, and you must issue and save rent receipts. So when your child pays you, even if it's through automatic debit, right, that $342.33, you need to issue a receipt. And you need to be able to produce those receipts to Social Security if requested. For PMV, the recipient should buy at least one meal out a week on their debit or TreeLink card or whatever they use. If the recipient's not physically able to go out, as we mentioned, putting a meal of groceries on their debit card would also work. Either way, save the receipts. Open an ABLE account for direct deposit of SSI benefits at ablenow.com. So Carlos is 19. Once he turns 22, his mother should help him apply for SNAP as an individual household. And she should consider charging him a separate $25 a month charge for heating and cooling, because that can actually increase his SNAP benefits. I've included here a link to a calculator that will let you play around with that to see if it actually gives you an increase in SNAP benefits. Also, remember the PMV changes every year. So every December, make sure you check online to make sure your rental agreement is in compliance for the coming year. And also, one suggestion I have for the rental agreement is to include language to the effect of, in the event that the amount of the rental payment listed is less than PMV, the rental rate is automatically increased to that amount. That way, if you accidentally forget to check in December one year, your rental agreement at least is still in compliance, and you'll just need to make sure that you collect those funds. So continuing with ensuring your child retains benefits short term. SSI is only one of the many types of government benefits for which your child may qualify. As we've just demonstrated, you need to carefully follow certain steps to ensure your child retains full SSI benefits. The same thing applies to other types of benefits they might receive. And you want to make sure that you're going to be paying close attention to all of their requirements. But this only ensures that they continue to receive them short term. Next, we'll talk about what happens to their benefits when you pass away. Okay, so scenario A, we're gonna go back to the Miller family. 6 years later, Susie dies with assets totaling $300,000. Half go to Rosie, who is now 18, leaving Carlos with $150,000 in cash and a Social Security survivor benefit of $2,500 a month. Carlos now has assets greater than $2,000, and so he loses Medicaid, Social Security, SSI, and SNAP. Even if he hadn't received the $150,000, his monthly income from the survivor benefit would also render him ineligible for Medicaid and SSI and likely SNAP. There's a few extra considerations there, but likely SNAP as well. I don't like this scenario. If I've gone through all the trouble to make sure that my child is receiving the needed benefits, I want them to keep getting those benefits after I die. So let's talk about scenario B. Okay, great news. Last month, Susie saw an awesome webinar through the ARC and decided to get her estate planning done by an attorney who specializes in working with special needs families. She set up a revocable living trust and moved all of her assets into the trust. She also set up a special needs trust for Carlos. When Susie dies, half the trust assets are transferred into Carlos's special needs trust, and the other half stays in trust for Rosie, taking care of Rosie's needs, but not giving her access to the full principal until she's 25. Not the point of today's presentation, but many parents would prefer their children not receive a large sum upon turning 18. In this scenario, Carlos has a special needs trust, and that's funded with $150,000. Because it's the special needs trust, Medicaid, SSI, and SNAP cannot take into consideration the assets it holds. So Carlos continues to receive Medicaid, SSI, and SNAP. Susie also had set up an ABLE account for Carlos, and the SSA survivor benefits are directly deposited into his ABLE account where they're shielded. So the income is not counted, and Carlos continues to receive Medicaid, SSI, and SNAP. As Lucy mentioned, however, there is a cap on what you can put annually into an ABLE account. So for families in this situation, there are other vehicles that we can use to shield these funds. From a thumbs up and thumbs down, who likes scenario B better than scenario A?
So thumbs up for preference for scenario B in your reactions buttons.
Yes.
Yes, yes, and raised hands. Yes, excellent.
So I want to tell you a little bit about my process and how I help families in this area. So this slide illustrates how we design and draft comprehensive estate plans for our clients. Our whole process takes 6 to 8 weeks. Estate planning is very complex, but we try to make it not complex for you. The first step is an estate strategy session, which is $300. In this session, we use information that you have provided about your personal assets to provide a look at tax and probate implications of your actual estate and how it will affect your child's benefits. This is also where we go over our flat fees. If we decide we're a good fit for each other, that $300 goes towards whichever services you've selected. The design meeting is where we roll up our sleeves and get to actually design the trust. This is my favorite part. So this is where you say the S&T for Carlos. He is a really big baseball fan, and I want to make sure that he gets to go to at least 5 Nationals games every year. And we can put these sort of things in. We also set up your revocable living trust so that if you have other children as well, you can decide how those assets are managed. Once we finish this, I go into a dark corner and I draft. Everything is 100% custom made for each client. The third part of the process is the document review. So I will then send you the draft documents. And I'm also going to make a video for you going through them because I know that getting this pile of legal documents can be a little overwhelming. So I make a video walking you through certain particularly important parts. After you've approved the documents, we would schedule a formal signing ceremony. All of these documents need to be signed with very specific legal formalities and in a specific order. As Lucy mentioned, we are a concierge service. We send a notary and 2 witnesses to your home to do this. At the very end, it comes back to me. I do whatever needs to be done, such as recording a deed in the name of your trust to transfer your home into the trust. And then I send you back a binder with the originals as well as a PDF so you have electronic versions. So that, I hope I stayed under 30. Okay, I'm a minute within the 30-minute mark. And so I wanted to come and talk about questions now. There's more info on my website, including a link to the prior webinar I made for the ARC discussing the role of special needs trusts and estate planning. If there's anyone who is just ready to sign up and get started, there's a QR code at the top right for estate strategy sessions. But also as a service to ARC of Northern Virginia, I've set up 4 dates where I have set aside some free informational calls. So if you go to calendly.com/arcofnova, you'll see there's 4 dates there where you can come with whatever question you might have about SSI, ISM, or about estate planning in general. It's not a sales call. This is just if there's a question you have, I'm happy to help as a service.
And we will send the link out. I will send the link out to that afterwards. So don't feel like you have, you can do it right now. If that's
and I'll also mention, so there's going to be a newsletter article coming out soon where I have a lot of this information where I'll be including the links, for example, to ABLE and to that calculator for SNAP and things like that. So I'll turn it over to Lucy now if anyone has any questions.
Yay, we've got some good ones. I'm super excited. So someone noted right away, they're getting SSI now, where their child is at the wrong amount, meaning they have been receiving this penalty, the 30% penalty for not charging that rent amount. So what do they do now that these new rules are in effect?
Okay, so first you want to update your rental agreement. And second, SSA has a portal. I'm going to see if I can pull this up here without changing what's on my screen. Do you see something different on my screen now?
Yeah, we can see Google pulled up now.
Okay, let me try a different one then. So the good news is SSA did prepare for this. And give me one moment. They have a mechanism, basically call your local office and you report these changes. You might be asked to provide them with a copy of the new rental agreement and perhaps even a rental receipt if this agreement has been in place for some time, and they will be able to change it in their system. So you can call the toll-free SSA number, which I'll just drop in the chat right here, But I think you tend to have better results if you go through your local office. I hope that helps.
Great. And so, some great questions here. Can a one-person household be a public assistance household? Person with a disability is living alone, for example.
No. I can explain more, but no. So in order to be a public assistance household, the person with the SSI and one other person must be receiving these benefits. It's not necessarily consequential though, because if you're only a one-person household, any ISN being provided from within the household would be you anyway. So that shouldn't necessarily make a difference in any sort of eligibility or payment.
So we've got lots of great questions about kind of the intersection of benefits with that first party trust that you mentioned. I'm trying to merge them in to one. So you talked about how SSI or other Social Security benefits in general can be deposited directly into an ABLE account. Can you talk a little bit about how any transfers to a first party special needs trust would look in comparison?
Okay,
But
sure.
cannot be done. Yeah.
So first, let me, just in case people here aren't aware, let me give you a very, very brief overview of a self-funded trust versus a family-funded trust. So they're both special needs trusts. A family-funded trust is when the disabled individual is putting their own money into the trust. And so you may often see this if someone was injured in an automobile accident, became disabled, and received a settlement, right? And so they might then go open a self-funded special needs trust with those funds. A family-funded special needs trust is when someone other than the disabled individual is funding the trust. And one of the great advantages of the family-funded trust is that when the person passes away one day, there's no Medicaid clawback. Medicaid doesn't get to go in and take out all the benefits that they had paid over the person's lifetime. So instead, it can be left to sibling, family, et cetera. For a first-party special needs trust, if you were to put those funds in there, and just could you remind me, are we talking about the survivor benefits funds?
Or SSI, anything. Sort of when can
Okay.
those be put into a first party?
Sure. So unfortunately, SSA will not make direct deposits into an S&T. So in any sort of scenario, those would be first going to that disabled individual and they would be in their name. So if they are getting $2,500 a month in their name, even if they're turning around and putting it into their first party trust, that will likely still affect their benefits.
So that's why ABLE account is preferential. And so as a follow-along question, you'd mentioned that maybe someone would reach that annual ABLE contribution maximum, especially if they're getting survivors benefits, right? When our Social Security amounts go up after parents pass away and retire. What other vehicles could we use or how should we plan then?
Sure. There's a variety and frankly, it depends on the sort of trust that the parents have set up. So one option, once you've maxed out that ABLE account, or once you know you're going to be maxing it out, is that you take, let's say that there's a total of 21,000 that you're going to need to put in it over the year. What you do is just each month, you don't put the full amount in. And that way you're keeping your benefits, you're staying under that limit, but you're also maxing out your ABLE account. So that's one option, and that's usually the easiest. Other options would be to do a first party trust at the very end of the month. And unfortunately, sometimes this involves being disqualified and then having to requalify the next month if you're able to put this all in 1 month. And there's really, frankly, not a lot of good options. The best one really is to spread it out so that you are receiving less funds directly to the point that it's not affecting your benefits, but then the rest is going into ABLE. That's the ideal way to handle it.
Yeah, and so if you have an ABLE account already set up, do you go to ABLE or to Social Security to change this deposit?
Social Security. I mean, unless you need to go to ABLE to find out what your account number is or something like that. but Social Security is the one who handles the direct deposits. And that's who you would be working with to get those changed.
Yeah. So it's Social Security will direct any benefits kind of based upon where you ask them is the
Except for to a trust.
Right. Wherever
Yeah.
it's allowed by law, I should say. They won't do
Yeah.
something illegal even if you ask nicely.
I know. Even if you're super nice.
Um, so let's see. Oh, this is a relatively simple one. Will my daughter's SSI increase when parents retire? So the short answer here is if your child received their disability in childhood, meaning this is not an adult acquired brain injury or something like that, they're a disabled adult child, then once a parent retires, if you look in your own Social Security account at ssa.gov, everyone should have one, you can see your primary insurance amount, sometimes called the PIA. That's listed. That's what you would get as mom or dad if you retired exactly on schedule for your age at 67 or 60, whatever, based upon your age. Once you retire and start claiming your benefits, your child gets 50% not taken from you. You get the equivalent of 50% of your primary insurance amount. Once the parent passes away, that jumps to 75% of the parent's primary insurance amount. So as we talk about how SSI benefits being deposited into an ABLE generally aren't an issue unless you've got other money going in, that's why having kind of those survivors benefits, it changes from SSI to SSDI, matters because it's a much higher amount. And especially in Northern Virginia, even if we earned a very normal Northern Virginia salary, 75% ultimately of that retirement amount can cause other kinds of eligibility issues. So
Absolutely.
a great idea to be looking at that ahead of time.
Absolutely.
And one other I'll answer fairly quick. What's the status of any legislation to increase the $2,000 SSI savings limit? It's not moving particularly quickly, given the nature of what's going on in federal politics and Congress. So the bill is active. It will keep being introduced until it happens, but I don't think that's imminent.
It doesn't seem to be a priority for this Congress.
Yeah. So right back to use your ABLE and special needs trust as best you can.
Yes.
People had asked for, and this is such a good plug for something Claire has nicely done for us, a repeat of that rental agreement language about the annual increase to be in line with the personal maintenance amount or the presumed minimum, and then can they see a copy of that? And so Claire, I'll let you launch into something you're working on here.
Well, I'll just say the ARC has done such a great job of providing sample rental agreements. And so, but this is obviously a very new rule. And so with Lucy's blessing, I'm taking one of them and I am updating them so that they are PMB friendly. And that will be available on the ARC's website with all of that information.
Okay, so do that. Oh, a great idea from a parent charging rent. If I charge rent based upon bedroom square footage, so the square footage that their child's using in the household, do I need to report it on my taxes as the landlord?
If you are receiving any rent from your child, you need to report it as income on your taxes. Keep in mind, the square footage is only relevant if you're charging under the current fair market value rate. That's the only time I can see the square footage being relevant at all. But yeah, either way, no matter what, you need to be reporting this on your taxes.
With these new rules, that calculation doesn't have to be quite the same. So great question here. Do I need to save receipts for every dinner out, or is a bank or debit statement adequate?
You need to save the actual receipts. I won't say for every dinner out. If they go out every day, maybe not. Have one a week. Have it boxed, you toss it in, you forget about it. Maybe Social Security doesn't even ask for it, but they may ask for it. So you want to make sure that the bank debit statements, if it comes to it and you show on the debit statement McDonald's $10 every Friday, I would hope they would be reasonable. But the best advice is to save the actual receipt.
Yeah. And just like Claire said, I mean, for any receipt, I say write the year on a folder and just throw everything in there. You don't have to categorize it sort of by month, don't overthink it. Just chuck it in there.
And just speaking of receipts, I just want to reiterate the importance of giving rental receipts. So those can be in many forms. Those can be an email that are, you have set up. Those can be a printout. Those can be a little stub. Those can come in many forms. But SSA, specifically talks about being able to produce rental receipts. So you want to make sure that you're issuing a receipt to your child each month.
Okay, great. So we had a question about that. And again, don't overthink it. Like there's an email, like a Canva or a Word template for a receipt, super simple.
Absolutely.
So let's see. We have a boarding agreement based upon the old rules prior to late 2024 when this changed for our adult child living at home and are receiving the maximum payment. Do we need to change anything or do anything differently? Like adding this weekly meal out kind of thing, for example.
So if you are already charging based on current market rental value or the pro rata share, those remain valid. And so, no, you don't have to do anything different. You mentioned a boarding agreement, which obviously includes food. That's fine. There's nothing against that, but it's obviously not necessary. It could be that just next time that you'll update your rental agreement, maybe you update it to this. Just putting on my lawyer hat here, if you're charging them $400 a month for boarding, and if that also includes food, there could be an argument to be made that, food's $100 of it, and therefore they're actually only paying $300 in rent, et cetera. I mean, that's not what's going to happen. Really, you're fine. But when Lucy sends around the new rental agreement, it just might be something you want to consider just so it's up to.
Yeah, simple. And parents ask all the time, so like if I'm a landlord and I charge this rent, then what do I have to do with that money, right? My landlord income. Do I have to report that in a special way to Social Security? Like, no, just like if your child was renting an apartment, that's no longer Social Security's business, right? That money has flown the nest. And so this kind of comes down to a calculation of, does it make more sense for you as a parent to receive that money as a landlord and report it on your taxes? Or does it make more sense for your household to now be able to charge less rent? You're getting less income as the landlord, so therefore less taxable income. Your child's keeping more of that money that they're not paying taxes on, right? That's the calculation I would run, but it's going to vary by family.
Absolutely. Absolutely.
A couple of good questions about moving to other states. Does it matter if I'm military and moving with SSI to a different state, or does it matter if I have a special needs trust and I'm moving to a different state?
No, yes and no. Medicaid and all of these, there are some aspects of it that are state specific. SSI is obviously a national program, but in terms of amounts and processes, there are some state specific things. So no, it won't really big picture matter as long as you're still meeting the rules. But you always want to make sure when you get settled in a new state, find your local ARC and just make sure that you're in compliance. Special needs trusts, something really cool about trusts is they're domiciled in a specific state. So if you have a trust that is domiciled in Virginia, it can stay there, even if the child moves. Now, that doesn't mean that's what you're always going to want. There are instances, for example, let's say you're moving to Illinois and the special needs trust requirements in Virginia don't quite meet their special needs trust requirements to receive a certain benefit. All special needs trusts, all of them that are properly drafted, I should say, include clauses for this of being able to port a trust into another special needs trust in another state for the sake of making sure the child receives maximum benefits. So in general, no, you're not going to have to change anything. And a couple of rare situations, you may choose to, and it's possible to do so.
Trying to get through some questions that we got more than one of. If one household receives VA disability benefits and another receives SSI, are we a public assistance household?
Well, let's go look at the list. Okay, so here's the current list. And you see number 7, we see U.S. Department of Veterans Affairs payments based on need. So if the VA benefits that you're receiving are based on need, then yes. If they're not based on need, then no.
So it's that means tested kind of benefit sort of situation. So when I pay my daughter's bills from her current SSI bank account, I'm hearing Rep Payee account here, can then I deposit the rest of whatever's left into her ABLE account without a penalty each month, or is that subject to a Medicaid payback?
Okay, so able accounts and Medicaid paybacks aren't related, but I can understand why you would think that. So Medicaid payback is an issue that has to do with special needs trusts, specifically with first party self-funded special needs trusts. If you're talking about your daughter having a checking account that the SSI goes into, and then expenses are paid out, including the rent to you and whatever anything else gets paid out to, you're asking if you can take the $200 left each month and transfer it to Able, absolutely. That, I mean, assuming that all the other qualifications that you haven't gone over the max, et cetera, that's not a problem.
And as a quick reminder, ABLE accounts can be clawed back by Medicaid once someone passes away. So there's not a tremendous advantage to keeping it in the ABLE account versus the bank account other than keeping that monthly asset limit
Right. Yeah.
below.
Let me qualify this. So if you left that $200 in her bank account, and if every month she had $200 left over, and eventually that reached $2,000, that would affect her ability to maintain benefits. So by transferring it to Able, you are protecting her against that. When it comes to Medicaid clawback, even though Able is susceptible to it, that's really generally not an issue because once, assuming that a properly drafted special needs trust has been put in place, you're going to be able to spend those Able assets down first, perhaps. And if you have a family funded special needs trust, which would not be subject to Medicaid clawback, you would likely use the Able account up first. And so most people do not end up getting to the point where they pass with a special needs trust that's family funded and an Able account, which would be subject to Medicaid clawback.
We got some good questions here about what's the difference between rent and shared living expenses, because we've been told that shared living expenses don't have to be claimed on the homeowner's taxes.
Two things. First, that's a question for a tax attorney. Second, when you say shared living expenses, if you're talking about the pro rata method of taking all the expenses of the household and dividing them by how many people live there, that version, which is still valid if that's, and that can be less than PMB in some areas, maybe not Northern Virginia, but in some areas it could be. That still needs to be reported as income to the extent that it's rent. To the extent that you think that there is a special tax loophole that would allow you to not report that, I think it really depends on whether you are renting or own a home. So, for example, many of us have had roommates before, and we all pay in towards the rent, and none of us were filing taxes about what our roommate was paying towards it, right? Because we weren't ultimately the landlord. But if you're the landlord and you own that property, or the bank owns it and lets you live there while you pay off the mortgage, as is the case for me and many others, then you would be reporting it as rental income.
Okay. So, oh, is there a difference if the whole family is renting a unit and then is essentially subleasing to the child with a disability? Does that change things? So, for example, whole family's renting an apartment and the child with a disability has to rent with mom to pay rent directly to her.
So let's say that you have a 4-bedroom apartment with 4 people living in it, and the rent is $1,000 a month, and mom pays that $1,000 a month to the landlord, and you pay, or the disabled child has an arrangement to pay Well, it wouldn't be 250 because we have to, if you're going to do pro rata, you're going to have to include utilities, maybe, repairs, things like that as well. So if they were paying their share of that towards it, um, that's a very good question. I don't know the answer to that because, if you were in a situation where all four people are just separate households and they're all paying rent to this landlord, that's a more obvious one where you're not receiving anything. I think it would depend on the amount. Is it more than the quarter of it? Is it less and you're actually subsidizing the difference? I think there's a lot of questions. And that's one of those things if you do have a specific question about if you want to sign up for one of the free sessions, just make sure you put that question in the box and I'm happy to have an answer on that for you.
Oh, we had a question about, can folks recommend tax professionals? Yeah, so if you go to the arcofnova.org and hit resources and then provider directory and type in the word taxes, yes. I don't know, 4-ish groups come up that do a lot of disability and tax focused work. And that's there, or you can shoot me an email and I can send you that link or send you some names directly. But there's at least a half dozen in this area that do a lot of that disability and tax overlap. About a year ago, we did a webinar that you can find on our YouTube channel. And Courtney Haycoop did that and talked specifically about tax issues for people with disabilities in their families, like walking through some common concern, this rent issue being one of them. So even though under the new SSI rules, the rent amount you are charging may change, may reduce, the principles all still apply, right? And so that's a good one to look at, even though that's just over a year old. And something I personally have watched a lot of times. So I haven't been keeping receipts before. What do I do now? Is this new? Should I be panicking?
First, don't panic. Second, when you say haven't been keeping receipts, do you mean for the meals out or for rent? Are they able to?
It says rent.
Rent. Okay. So if you've been receiving those deposits and you have records in your bank of those deposits and you would like to make notes, maybe we won't call them receipts, but you're going to make some notes in the ledger of having received those, do that. And going forward, issue actual receipts. And if you want, you could send your child an email saying, this is acknowledging that on this day you paid this, on this day you paid this, on this day you paid this, based on your bank records. There's nothing wrong with acknowledging the payments that they've already made. And while that's a little bit different than a contemporaneous rental receipt, it should suffice for the purposes if it needs to. So that for past ones only, going forward, contemporaneous receipts.
So we got a good benefits intersection question here. We haven't yet applied for SSI for our adult child. He's currently on our family health insurance and should be able to stay there. So we're good on that front. Is it possible to apply for and receive Social Security benefits without receiving Medicaid so that we can avoid the Medicaid clawback?
Oops, I'm sorry, I clicked the wrong button. In short, I don't think anyone can make you take Medicaid. So yes, but I'll let Lucy jump in on that as well, as I know she has more experience with the Medicaid side.
Yeah, so Virginia is one of, I think, 2 states in the country where if you receive SSI on the basis of being low income and having a disability, you do not automatically get Medicaid. So nope, you won't automatically get Medicaid. Even if you did apply for and receive Medicaid, any Medicaid clawback is based upon money you actually spent of Medicaid dollars. So for example, if I got Medicaid for my son, but never once gave that Medicaid card to the doctor, to the pharmacy, to the therapist, to the hospital, no one ever billed them, then I wouldn't have a clawback, right, even though he had Medicaid. It really
Right.
is based upon actual dollars used. So yes, in either by never receiving Medicaid or having it and never using it, if for whatever reason you wanted it as a super duper backup, that's an
So,
option.
for example, I have a client who has insurance and Medicaid for the child, and the Medicaid pays for the copays. So it's a relatively small amount that Medicaid is paying for. Um, and so the clawback would be somewhat minimal, but they use their insurance as a primary, but they did want to go ahead and get that Medicaid as well. So there's options.
Okay. Just to clarify, do I have to go to Social Security in person to make changes regarding these new rules?
No. In fact, sometimes they won't let you go in person.
Ooh, a
So
pity.
yeah, I've tried. Um, so if you go on SSA's website, basically what you're talking about is reporting a change in an SSI recipient's living arrangement. And there's a 1-800 number that you can call. You could also call the local office if you wanted to, and try to schedule a phone appointment. But unless they request that you come in person, it's unlikely that that will be necessary or even allowed.
Okay, so we got a question about we have a 19-year-old daughter who receives SSI. She's a dependent on our
Lucy, do you mind adjusting your mic for a second? I'm so sorry, I can't hear you.
Oh yeah, let's see. Sometimes
There we go.
it's not the world's fanciest laptop, I'll be honest. Nonprofit dollars at work here. So concerning Medicaid, we are parents of a 19-year-old, so legal adult who receives SSI. She's a dependent on our taxes. Is parents' work income counted for her Medicaid eligibility? And the answer is a
No,
simple no, because she's a
no,
legal adult. No, your
yeah.
income and assets aren't an
So
issue.
that's called deeming, right? Where or SSA takes into account the parents, for example, income, which for a 7-year-old, they do for many things. But in this situation, no, your income is irrelevant.
We are right at time. So,
Oh, goodness.
Claire, I
Okay.
wanted to give you a second if you wanted to wrap up and to remind folks that we'll send out kind of a summary or some sort of way to look back at what Claire showed today with their email, along with the link to the way to sign up for a conversation with Claire. So the
So
conversation's not ending, the webinar's ending.
absolutely. Well, thank you everyone for attending and for sharing your time with us and for advocating for your children because if you're on this webinar, it's because you are advocating for your child and and that's so important. And so just give yourself a moment and have a pat on the back for all the work that you're doing because it really is a lot. And we need to take a moment to remember that. And so y'all are all doing a great job. You all rock. If you have, little questions that you just want to ask an attorney about with estate planning or SSI, please sign up for one of these free sessions. If you'd like to get started with estate planning, you can go to my website, trustandwealth.com to book, or there's that QR code there. And so I wish all of you the best. And I thank you, Lucy and the ARC for hosting me.
Thank you all so much for being with us, and we look forward to seeing you at future events. Have a great day.